Good morning, everyone. We will start. We are a few minutes late, so we're really happy to have you join us this morning. I'm sure that everyone's starting to be a bit tired from all of the session, all of the discussion, but I think we are touching upon a very important topic, which is the one of funding and financing and funding strategies. And we have today experts joining us to present their vision on that, their activities, and then we'll have a panel discussion following their presentation. So I'll just start with a couple of words to set the scene. We will, of course, give you the chance to ask questions after the presentation. It's really, the aim of the session is really to be an interactive discussion. So my name is Marc Espitalier-Noël. I'm Funding and Finance Manager at Hydrogen Europe. So I cover all topics related to public funding and relationship with private investors. And I wanted to start the conversation by giving you a few words to set the scene. We are setting up a new value chain with the clean hydrogen sector, and the investment needs are huge. It's really tough to navigate all the numbers that we have out there. It's a market which is really hard to assess because it's a new one. So there are a number of applications that we don't know, and we are really comparing a lot of different things. When we look at numbers out there, there are the numbers of the Commission assessing the investment needs of being between 300 to 470 billion by 2030. These numbers have been assessed by the European Court of Auditors, and they have been considered quite low, especially that they don't cover any end usage needs. And then we have other data from data providers like Deloitte, which assess that the need should range between 500 billion to 900 billion by 2030 in Europe alone. So it's just to have an idea of what the challenges that we have ahead in terms of funding and finance. When we look at public funding in Europe and where we are so far, also a very difficult exercise because funding schemes are quite fragmented, and it's a little bit too hard to navigate the public funding sector and to understand what is available for hydrogen and how much of that money is actually going to the clean hydrogen sector. If we look at committed money by the European Union regarding climate, we have a pool of 125 approximately billion euros for 2021-2027. And so far, out of this 125 billion, only 5 billion euros have been used for the clean hydrogen sector. Most of it has been funded by the Innovation Fund, which is really a very important tool for our sector. But it's just to give an idea that public funding available and actually going to the sector is still quite low. If we look at national member states and state aid funding, we had 90 billion euros committed through IPCEI. All of that money hasn't reached yet the company, so it's a committed amount of money, but still companies are struggling to get access to the money. And we also try to assess what are the schemes relevant for clean hydrogen in Europe and internationally, and what are the committed money that companies can apply to within these schemes. And we see that in Europe, Germany really leads the way with around 16 to 17 billion euros in public funding. And we also have the Netherlands and France, for example, with relevant schemes. However, if we look at the global scene, we have the UK, the US, and Japan with extremely high ambitions. And we need to ensure that Europe, in the next budget, in the next MMF, takes this in consideration and ensure that we have the right support for the sector. I will just also quickly tell you about private finance, because we know that this investment needs won't be all covered by public funding. Public funding is a leverage which needs to be smartly designed to attract private finance. So just to have an overview of what's happening in the clean hydrogen sectors, this data is from us. We have a fundraise monitor that we build every year. And so far, at the end of October, we have reached a 4.1 billion euros equity fundraised with more than 50 hydrogen funding fundraised mapped. We see that we have more than 90 investors involved in this fundraise, so we see that still these fundraise are split and between co-investors. And we have some quite interesting data out of this analysis, seeing that the US is really leading there with almost 50% of the whole value of this fundraise for US companies, while China is second with more than 20% of investment received. And then in Europe, Germany, Belgium, and France are leading the way, but still lagging behind the US and China. So we had a few quite interesting fundraise also this year, with a 1.1 billion euros fundraise by Infinium, so a fuel company from the US, and also a 1 billion IPO in China. And in Europe, we had, of course, Sunfire, which raised 215 million euros this year, but also John Cockerill and Isetco in the mobility, which raised 200 million with High24 being a lead investor there. If we look at where is this money going, it's still mainly manufacturing. So almost half of the money received is for manufacturing, then follows production and mobility. And then we have other a bit less represented applications. So this is really to provide an overview of what is it that we need and what is happening right now, just to put a bit in the light the gap that we still have to face, both in terms of mobilizing private money. This is mostly equity. Debt is really rare still in the sector, especially through project finance. So we need public funding to step in and also to be well designed to ensure that we attract more private finance to the sector. So that will be it for me. We will now start through presentations. As I mentioned before, we'll have our speakers do their presentation, and then we have a panel. So you will have a chance to ask questions after the presentation are being done. And I will invite Marc Isabelle, who is the founder of European Economics, to join me on stage for his presentation.
Thank you, Marie. Good morning, everyone. I'm Marc Isabelle. I'm the founder of European Economics. It's a consultancy specialized on public funding. I started the company 15 years ago. So I'm an economist. All the team in European Economics are economists. So don't blame me now. Wait my conclusions. Just to say that we are European, global citizens in the team, but we wake up every morning to try to make the best, help our customers, mainly industrial companies, secure public funding for their strategic projects and foster the energy and climate transition to make the planet a better place to live. That's our key motivation, I would say. My focus will be on public funding only. My figures are different from Marie's figures. This is what it takes when you try to count everything. And I will focus on a number of initiatives driving public funding to projects in the clean hydrogen sector. Identify the fact that a significant amount of public funding for clean hydrogen project is still largely untapped in terms of its potential to unlock the clean hydrogen market in Europe, and try to figure out two options to, let's say, activate this potential in terms of public funding and move forward with some projects that are still not able to move forward. Economic thinking is all about decision-making, markets, competition, innovation, and so on and so forth. So these dimensions will be the drivers of my presentation. Just one slide about European economics. if I make a poll now in the audience, is public funding paradise on earth, or is it a terrible jungle? I'm sure that 200% of the answers will be it's a terrible jungle. The service that we provide are based on the fact that we live in that jungle every day, the team. So we survive there. We know what directions to take, how to drink, to eat, how to survive with the monsters, and we can help you do this. So you have our key figures, track record, including the hydrogen business. We supported close to 60 projects in the 4 IPCIs and help my customers secure, I see 11.6 billion in terms of public funding, so that's big numbers, all across the value chain, from technologies for electrolyzers, fuel cells, to hydrogen production, use in the industry, and in the mobility sector. I would like first to, this is a slide to introduce the whole thing. We are living in a very fast changing world with some very strongly disruptive mega trends, climate change, the rise of China as a leading country in terms of global trade. Of course, the COVID outbreak, this is a little bit of the past now, but still. The war in Ukraine, the Inflation Reduction Act in the US, all these disruptive macro trends making life of industrial companies in Europe quite difficult. Not to speak about, of course, the huge cost of an energy transition, disruption of supply chains, and so on and so forth. But as a European citizen, I'm quite positive about the capacity of Europe to react to this crisis. You have on the slide a list of 6 initiatives from the European Commission and the member states to try to tackle these big issues, the Green Deal, the Critical Raw Materials Act, and so on and so forth. So I think that we live in a continent that has all the institutions to be able to react fast. Of course, I will criticize a little bit after the situation, but all the assets in terms of, once again, the institutions are there to be quick and to be able to react to the crisis. And you are the industrial companies in Europe, you know the situation is quite difficult today, stuck in between, let's say, America and Asia when it comes to competition. Hydrogen is at the clean hydrogen sector in particular is at the heart of the EU strategy when it comes to climate, energy transition, industrial competitiveness, etc. And I listed a bunch of initiatives on this slide where you see that a big amount of public money was put on the table by the European Commission, by the member states, to try to kickstart the European clean hydrogen market. All in all, I counted 245 clean hydrogen projects that were supported in the initiatives on the first slide, and 29 billion euro grants. It's not all of that money is not, I mean, that money is so far largely untapped, and you can see it on the graph that I built from the data of the International Energy Agency. This is for clean hydrogen project from electrolysis. You have the number of projects in orange and light orange. Orange is operational, light orange is F.I.D. under construction. And the line below is the cumulative capacity. And you see that taking into account the projects under F.I.D. and construction until 2028, we are far away from the target of 6 million tons per year of capacity in 2030. This is the European target. So there is something that is not working there. You know it better than I do. And I will focus on the 29 billion grants. How come is it that this money was not able, or still today not able, to kickstart the European clean hydrogen market? You know the situation better than I do. Once again, I'm an economist. When you look at the crisis in electricity prices following the war in Ukraine, cooling down a little bit, but still the price of renewable electricity is much higher than it was in 2019, 2020, with the consequence that the levelized cost of hydrogen has gone up from the period previous to the war. And I have a quote from the last Hydrogen Insights that was released some days ago, where they say that many projects are delayed, not to say cancelled. But but in the US, where apparently 90% of projects reaching FID in the past year were located. So they have something that works in the US, and we have something that doesn't work compared to what they have here. The situation when it comes to this largely untapped potential of public funding, this 29 billion, just looking once again at the project on the first slide, is that the amount of money of public funding is calculated through business plan for the project. You make a business plan of the project, you show that you have a negative net present value, and you calculate how much grant you need to bring your internal rate of return to the level of the WACC. This is the way the 29 billions were calculated, more or less. But these calculations were made in 2020, 2021, 2022. We supported a bunch of projects to do this. Then there was a decision from the European Commission, for example, for the first two IPCIs in July and September 2022, and then the world changed. Okay, inflation, higher cost of electrolyzers, higher cost of renewable energy. So basically, the situation is the following, from my point of view, once again, the economist's point of view. These 29 billions, for a large part of it, is not enough anymore to allow the companies to reach FID. Okay, because the profitability has gone down because of all the rising cost of the inputs. So we have three options ahead. I will show it on the next slide. Either the project promoters want to keep the same stated amount and they have to downsize the project to increase the profitability and reach FID, or you keep the same big projects, because once again, the numbers and the ambitions were really big at that time, 100, 200, 400 megawatts, but then you have to increase the grant, and I will show you that we have a solution to do so, or you just step down, wait, and postpone everything, but we know this is not a solution. So this slide is identifying the two options, the two ways ahead. So the first, on the left-hand side, you have the situation initially in 2020, 2022, where you have the profitability. On the y-axis is the profitability. On the x-axis is the size, scope, ambition, etc. With that grant, the projects are not profitable. This is what you have to show to receive grant. And you need to calculate the grant amount that a project requires to reach a profitability up to the level where your internal rate of return will be equal to the WACC. Then came the war in Ukraine, then came the inflation, the rise in energy prices, all the profitability. Most projects' profitability went down. This is 2023, 2024 situation. And I hope that in 2025, following the information that I share with you here, there will be a possibility to move ahead with these projects, use the 29 billion, either by scaling down the project, moving left on the x-axis, and up on the y-axis to reach again the expected profitability, meeting the WACC expectations, or secure more funding and have the big projects go up again on the y-axis until you reach the WACC. And for the second solution, meaning securing more grant, there is a precedent. There is a decision of the European Commission in Greece for LNG terminal, where in 2021, the European Commission agreed that Greece would fund these LNG projects with 166.7 million euro. Then came the inflation, the rising costs, etc. And Greece wanted to allocate 106 million more to that project. They said to the European Commission, can we do so? And the European Commission analyzed the decision and said, yes, you can do so, because there was a rising cost that nobody could expect, okay? And the loss in profitability can be compensated with state aid, because the investors cannot put more money than what they did in the first hand. Okay, so it's possible, there is a precedent at the European Commission level to increase the state aid amount for a given project that is facing unprecedented situation in terms of rising costs. I have 40 seconds left, this is good. My conclusion, please revive the zombies. From one FID to the other one, this is falling in doom versus final investment decision. I have 4 conclusions. Once again, the Member States and the European Commission should continue the discussion. It started 1 year ago, if I understand, in the General Assembly of the IPCI, to agree on the way to secure more public funding for your projects, clean hydrogen projects. Scaling down the projects is one possibility, okay, and keeping the same amount of public funding. The solutions, if you would like to increase public funding for your project, once again, it's possible. We worked on several projects this summer to do it, in the IPCI, in the clean hydrogen business in particular. But instead of going one by one to the European Commission or your national authorities to say, we have an idea, we would like to increase the public funding, do it so, but also please do it collectively. You will be stronger. Your message will be stronger when you speak to the national authorities and the European Commission. Last point, but you know it better than I do. Public funding is not the solution forever. It's just about kickstarting the industry. And once the market will increase, there will be economies of scale, learning effects, and then public funding can stop, and the industry will roll out, let's say, naturally, like the solar PV did some decades ago. Thank you very much for your attention.
Thanks a lot. Thanks a lot, Marc. I think it was really interesting, and I don't think our numbers are different, but they're looking at different perspectives of the public scheme. So now I'll call Mattijs, Slee, who is the CEO and co-founder of Battolyser Systems, to join us for his presentation. And we can give him a round of applause.
Very good morning, everyone. I'll give not the economist, but the scale-up or the entrepreneur perspective of the same. So what we do first, for those that don't know our technology or company yet, we are a manufacturer of an electrolyzer that is 100% flexible. It holds battery capacity that allows it to first charge like a battery, and when fully charged, it can produce hydrogen and oxygen like a conventional electrolyzer. And making that so flexible actually enables a new business model, which I'll talk about in a minute. But that's going to set us apart. The technology was invented at Delft University of Technology, and we are commercializing it. Now, what that does, I think, for Europe, because I guess that's where it starts with. If we're talking about funding, we're providing and supporting, obviously, a societal cause. And for us, that is basically allowing more intermittency, so more solar and wind to be developed, and also reducing the cost of green hydrogen. And lastly, it's also for us about strategic autonomy for Europe. So when we ask for funding, which I'll come to talk about, basically this is what we can offer back to Europe. Our ambition as a company is to develop our products and build out our manufacturing capacity to deliver up to 1 gigawatt of Battolysers by the end of the decade. And these are some of the partners we're working with. So slightly a bit more about the technology, and then I'll dive into the funding side of this. So we have an iron and a nickel electrode. A conventional alkaline electrolyzer, for those who don't know, have 2 nickel electrodes. And the iron and a nickel electrode, when you insert a current, first charge, just like a battery. And when these electrodes are fully charged, they start to produce hydrogen and oxygen. It also allows then the same system to reverse the potential or give back that energy to the grid. So imagine, for example, in a Dutch situation where we're from, offshore wind is landing at the shore, typically in industrial clusters, where you also have a connection of high voltage cables and hydrogen pipeline systems. At those locations, we can convert excess wind energy into hydrogen. And when power prices are high, we can actually divert the energy straight into the grid and also discharge the stored energy in our system. So that makes us basically much more of a system solution other than just producing hydrogen. And that, if I go to the next slide, actually allows us to reduce the levelized cost of hydrogen much more than just focusing on efficiency and cost. Don't get me wrong, efficiency and cost are important. We focus on that too, but you can, if you are 5% more efficient, you can shave off 4% of your levelized cost of hydrogen if you do it well. But we need to halve the levelized cost of hydrogen, and we can only do that by converting the cheap hours of the day into hydrogen, and in our case, actually selling off the high-priced hours back as power to the grid. Now, that business model we are developing with our customers, and come visit our booth if you want to know more. But now, on to funding. There's a few points I want to make. we have been, in a few cases, successful in obtaining funding from Europe. It started with the Just Transition Fund, after which we also received a venture debt from the European Investment Bank. And most recently, we received an announcement to also receive Innovation Fund. That is still in progress. So we hope by March to be able to announce the further details on this. And our collective learning on these types of funding schemes is, first of all, they're absolutely required. For a company like ours, we cannot develop our product just based on equity. It doesn't make us as a company investable. We need a good mix between equity, debt, and grants that combined offer an investable opportunity for our customers, for our investors, sorry. So it's an absolute necessity. And to have that balance right for the company where we are, just as an example, so that's in between Series A, Series B. To give you an order of magnitude, it's about 1/3, 1/3, 1/3 in terms of funding you'd need to have sort of a healthy mix to be investable by private investors. So this is essential. But a few learnings from us is, first of all, the EU grants. They often pay out at a certain milestone, and you have to pre-finance that yourself up front. Now, for a large company, a going concern, that is not per se an issue, but for scale-ups, that is really tough. If we need to front that money and only be basically awarded the funds after we have completed the work, that requires a huge drain on one of these other pillars, basically the equity side of our capital stack. Second, the EU funding, the funding schemes are very competitive. And in a way that's good, right? I mean, that's good because that makes the best sort of project come out. However, we also should realize that is distorting the landscape somewhat. So the companies that are able to provide the resources to submit those granting schemes, and they are very elaborate, they basically have a better chance. For us to invest into an innovation fund application, for example, is simply very costly and very resource intense relative to the size of the company. The third point actually was already made. So we have seen that subsidies that were awarded in the past today actually are not enough anymore to ensure a project FID. And also we see that. So what happens then is you have stacking of certain subsidy schemes or instruments on top of each other. And basically you create a chain in which everything kind of needs to fall in place before the project happens. So there becomes sort of an unplanned dependency on various instruments that was actually initially not thought of, which is delaying, obviously, project FIDs and general rollouts. My fourth point here is there is actually, we talk about an unlevel playing field with sort of competition from China or perhaps even the US with the IRA. But we should also realize there is also an unfair playing field within Europe, unfortunately. Yeah, so 50% of all the state aid is distributed by Germany, 25% by France, and the rest of the 25% by the other member states. So the amount of money being allocated by the European Union is actually still relatively small compared to what is allocated by member states. And that's where the uneven playing field comes in. So I would argue, bring more to Europe and less to member states to create a level playing field within Europe that's simply today not there. I think I addressed them all, did I not? Yes, sorry, I skipped over number 4, and that's also something we're dealing with right now. It is actually quite complex if you need multiple funding instruments to make one project work, on how they stack on each other and how they sometimes interfere with each other, also considering state aid. For that also you can ask expensive and knowledgeable consultants to help you out with this, but it's for a small company like ours not so clear up front. and again, costly to figure out how all that stacks together. Let me close by saying that for mostly I'm very grateful for the European Union as a whole to allow and enable these type of instruments. They are vital for us as a company to grow. And I think they are the basis for a sustainable and competitive Europe for the future. Thank you.
Thanks a lot. I think very impressive funding strategy and achievement, so congratulations for that, and very interesting point on state aid split and also the size of state aid compared to EU level funding. That's really relevant for further discussion. So for our last presentation, I'll invite Thiago Figueiredo, who is the Chief Business Officer at 1S1 Energy. And a round of applause for Thiago, please.
Like this. Hello everyone, good morning. So I'm also an economist like Marc, but I'm not going to talk about economy, and we are a startup, not a scale-up yet, so we'll give you the perspective more on the startup side. So I think we're just going to start a little bit with what's special about us, why are we here, why we managed to raise some interesting funding up until now, and a little bit of our strategy being, you know, a seed Series A stage startup that wants to develop novel electrolyzers based on going from the bottom up. So working on the elephant in the room, which are the materials inside. So I'm not going to spend too much time talking about 1S1 or what we do. I think we are at the startup area, so I'm happy to continue this conversation later on. But essentially, like if you want to remember one thing about us, we are the company that managed to upgrade the PE in PEM. So we replaced the proton exchange groups in proton exchange membranes, and that opened the floodgates to innovate in several of the other components of the electrochemical cell. So the idea is building novel stacks based upon this technology, so meeting the KPIs, you know, to be able to then produce hydrogen cheaply. You know, essentially performance is one of the big ones, but you also want to work in CapEx durability. So that's what we're doing here at 1S1. So that's just the message, but it's not necessarily the point of the panel. So please talk to us a little bit later. So, like as a startup, I think the main thing is we want to be opportunistic. Right, as a company, you know, when you started a company, interesting enough, was founded in the US. I'm one of the founders. I was based in Portugal. Came the pandemic, so I thought I was going to move to California, didn't have to, stayed in Portugal. And back then, actually, it was very interesting because Europe was a lot more advanced than the US in hydrogen. So we did the intelligent thing at that point, was to say, you know, let's focus on Europe. And that's part of our strategy. This is why we're here. This is why most of our operations are actually in Portugal today, albeit the initial company is American. And essentially we are an odd bird a little bit because we're all entrepreneurs from the past. We built businesses in the past. We're not a spin-off of any university, so we didn't come with like loving any technology or grants, etc. We actually zeroed in on PEM because of economics, studying it after we founded the company, after we then decided to go to pursue that. And then we ended up looking at the globe and where we had, you know, connections and people that were interested. And these are some of our investors. And essentially, like one of the biggest lessons at the beginning is like, you know, find people that believe in you. And that's what we got. So we're super grateful for the investors that started earlier on when we didn't have too much information. Obviously, we have a lot more now as the company progresses. So these are some of our operation hubs. As I said, we have been as opportunistic as possible in terms of finding funding. So essentially here in Europe, we're part of a Horizon grant together with Enel, with Jülich, etc. So this is something that we are executing in Lisbon, which is our main operation now. We are actually here. Marc has been able to help us through the jungle during the IPCEI process. So we actually in 2020, we've applied, we were invited by the Portuguese government to apply for the IPCEI. I will tell a little bit more about this story, which is somewhat mixed in terms of feelings, to be very frank. We leverage also the operation in the US to work with the National Renewables Energy Laboratory, which is super interesting for validating our technology and helping us develop. And I'm going to talk a little bit about Brazil. And we have our partners here from Brazil. And essentially, this is a very interesting mechanism that we don't think exists in Europe, at least from our knowledge, and helps a lot startups to work with corporates in a way that corporates have skin in the game. So I'll explain a little bit. But as you can see, we've been trying to explore the opportunities and go, you know, at least at this stage where the funding was and where the opportunities to work with big corporations were. And then eventually we get into the point that we're going to narrow it down and define our operation going forward as a company. So this is us. I'm pretty sure we're probably the underdogs within all these players, but our project is special, otherwise it wouldn't have been approved by the European Commission. And again, thanks again for Marc to helping us navigate all the intricacies of the process and learning on the go. So this was approved in 2022. The idea is, and it was and it still is, to develop manufacturing capacity in Portugal. This project has a huge component of R&D as well. So it's moving for the generations of our technology, get to the final stack, and then start manufacturing it. And our intention still is to put it in Portugal. But that being said, this was approved 2.5 years ago, and the contracting is actually a generous way of putting it. We still don't have, very clearly a path on how we're going to be able to accede to these funds and actually start meaningful operation there, which today is mostly the Horizon grant and the laboratory that we have. So this is why we say it's a mixed experience so far, right? To some extent, it was really, really great for a startup that we kind of punched above our weight in building corporate relationships in Europe. That was great. So it really helped. And also at the earlier stages of our company, we managed to literally model the whole thing. As Marc was saying, this is literally like a discounted cash flow. So we had to think the whole company from the early days, and that was super helpful and it helped build the business and us thinking of things that we might not have thought about at that point. On kind of a mixed sort of side of it, it was a good storyline for fundraising, but not really, because when you don't have like a guaranteed, and I think my colleague, maybe, I don't know if you had this same experience, like if you don't have commitment clearly, like when you say, we're gonna do this, it's amazing, say, but when is the funding gonna come from? How is the funding gonna come from? And so it wasn't like necessarily just a positive to raise funds from VCs and from private investors, to be honest. So that was a little bit of that. And then on the bad side, it's like, we put a lot of blood, sweat, and tears, and there was a lot of resources from funding and also from time that we put in. And after it got approved, but then the funding was not allocated or that wasn't clear. And that's something that has been pretty complicated for us also to explain and to understand, and eventually also to try and unlock now, and for a startup with limited resources to be trying to figure out and play the game and how we're going to unlock this. So it's, but we're still confident. We want to work with it. We want to make it work, and essentially, but we're getting to the point that we're going to have to make a decision whether, it makes more sense for us to go back to the US or eventually even to Brazil, which has been super interesting for the company. So we have to decide, because the startup moves really, really quick. And that's, and I think here, the successful experience in Brazil is something that I think here in Europe we can replicate. What happens in Brazil is that the oil and gas agency and the electricity agency, it's mandatory investment in R&D for companies. So that means that the companies want to work with you. So for a startup in a field like electrolysis, that you're developing hardware, these are huge customers. They're just not going to buy your electrolyzer when it's ready. It takes time. Working with them from the beginning to get to the point is super critical. And this mechanism incentivizes them to get into a little bit lower TRLs, working with the companies. We are inside the companies almost like team when we're working together. So that's super positive, and it's been a great experience, and we wish to continue to do so. And we do think there's merit to exploring potentially this here in Europe, also as a way of helping startups with very difficult technical products to actually be adopted at scale. So, sorry, I think I ran out of time. That was a little bit of my presentation. Thank you.
Thanks a lot. Very interesting perspective on IPSA and also on the Brazil model that I would love to hear more about. I think we can learn a lot from it. So now we'll have a panel discussion. I'll invite our last panelist, Achmed Junusov from H2 Hub, who's the CEO of H2 Hub, to join us. So we can give him a round of applause. I think, is it working? Can you hear us? Yes. Maybe, Achmed, you want to introduce yourself so that we can then give the floor to the audience also for questions and give a couple of words about you?
Of course. Can you hear me? Is it good? My name is Achmed. I'm the CEO of H2 Hub. It's Europe's leading innovation platform for the whole hydrogen value chain. And what we do on the one side is especially support startups like 1&1 Energy to get their next customer and their next investor. but we also support by leveraging the innovation potential of corporates, bringing them insights in the market, doing some tech assessments and also other stuff around. And this is what we do as H2Hub. We founded that company almost 3 years ago. I worked still for the largest TSO in Germany, but now since February, I'm full-time H2Hub.
Perfect. Thanks a lot for the introduction. I just want to say that if you have any question about the presentations, there is a mic circulating, so please raise your hand. Otherwise, I'll just start asking questions. Yeah, there is a question here in the front.
Thank you very much. Thank you very much for such a brilliant panel, very interesting, insightful presentations.
Can you speak a bit closer?
Yeah, sorry about it. Yeah, so the question is, but how do we actually fill this gap? Because all of you mentioned about, particularly Marc, that the public funds or venture capital funds come at the first stage in order to help later upscale. And then there is a gap, kind of like magical gap that needs to be filled. How to make it happen? Because most of the project developers actually face the struggle that they get the money, but to upscale to the market is actually a very big road, and very often they don't get there. So how do you see what other options, probably on the regulatory side or whatever you have in mind? Thank you very much.
Thanks a lot for the question. Does someone want to start answering?
It was a bit difficult to hear. Let me try to rephrase, and if you nod, then I can try to answer it. So your question, I believe, was how can you scale up, sort of, when you, that to do for, and you then say project developers. So let me rephrase it. So for us, and maybe perhaps someone else can talk about project developers, and if you talk about production of hydrogen, so hydrogen production factories, that scale up is different than a scale up for technology developers. So for us, it's about developing ever improving products and then bring them to market to a stage that they are fully de-risked and can be bankable. I think that's our end stage. There is generally funds for the research part, so let's call it low TRL, technology readiness level. And there is funding for project rollout, so once you're bankable. The difficult bit is in between. Often refers to the first of a kind projects. And to finance those is absolutely tricky. Yeah, the subsidies are needed. Commercial banks can't really help. And also equity investors like venture capital, their euros, their money is not suited for those scale-ups. So that's the tricky part, and that's where some of the instruments help. But also there's a role for national member states. And there I see the difference. So in Germany, for example, that is more forthcoming than some other member states, in particular the Netherlands, where there see this big discrepancy.
Marc, maybe you want to add something on this?
Can you hear me? Yes. I would like to add just one point about the regulation on state aid. I think the difficulty, stop me if I'm wrong, but one difficulty is to have this kind of milestone process for funding where you increase the TRL, then you have to go to new funding and so on and so forth without any clear visibility. What we like to provide is a comprehensive funding solutions that allows you as the CEO of the company not to think about funding every new year. And the regulation is fit for that because when it comes to IPCI, which Thiago knows quite very well, but you have the same in the so-called state aid for R&D framework. State aid for R&D projects allow the member states, maybe they don't do it, but the regulation is there to fund projects from, say, TRL 5 up to TRL 8. Okay, so you could apply for just one big project with a technology that is at TRL 5 in the lab and receive funding up to several hundred million euros, depending on the deepness of the pocket of the member states, up to the scale-up of the industrial manufacturing process. So you apply with the big elephant, you secure funding, and then you don't think about funding anymore until you can scale up your technology and go to the market.
Thiago, do you have anything that you wanted to add on the valley of death? How do you get over this valley of death with the funding? I know you went through the IPSA, you had some challenges also there that you mentioned before. So where are you in your funding strategies now? And how do you overcome this path?
Well, no, I think, yeah, it's a different experience for sure. We are still earlier than other companies in that path. I think I see it twofold. One is very important to work with private investors and venture capitalists, but obviously they want you as well to make sure that you have what they call traction, which is when you're working with corporates, right? And potentially, and also grants, because it's actually a way of diluting their investment needs. So you need to work with that, and that's what we're trying as much as we can. So we want to capitalize, and we are super grateful for the funding that we've received and what we have applied. But also, like, we need that because it's important to show for the investors so they are more interested because there's less of an equity risk. And then there's the corporate component, and I think that's really critical, right? I mean, I think we in the industry here, like, we all believe it's going to happen, but for it to happen, we have to be able to deploy it more, and we have to learn how to work with these electrolyzers. And we know the technologies that exist, albeit they're super good, but still needs a lot of work done with companies such as ours that will develop the next generation products, then somehow will get to market and will be able to be deployed at scale. And I do think that, it's really important to find ways of diluting the risk for the corporates to actually want to work with that. And that's in a certain way how you cross the let's say, the valley of that, right? Because you have a partner, and the partner, I think it's to some extent are the public institutions, yes, but I do think the corporates have to be a partner because they're the ones that are going to buy it from you. So you want to make sure you develop towards their specifications. So at least that's a little bit of my 2 cents. Thank you for asking.
Yeah, Ahmed, I think you have a good perspective on venture funding and also its relevance to support the project and the technology developers there.
Definitely. So if I may add, so of course there's 2 differences. The one is when you are trying to get from 0 to 1, climbing up the TRL ladder, like having technology on the one side. And on the other side, if you are like a project developer, and I guess, of course, everybody knows that huge valley of death, but I would say the answer to that is operational excellence. If you achieve at the same time somehow to get some kind of agreements and to somehow convince also on the other side the investors to do something, then you can fill the gap on the one side. On the other side, in Germany, there are now more and more national initiatives like the WIN initiative, for example, especially focusing on scale-ups, focusing on the first-of-a-kind plants, somehow bringing government money into that kind of more risky, not bankable kind of projects. But we definitely need more of this kind of stuff. And maybe also like already giving like the message that I wanted to send here for people like Thiago. It's of course the venture capitalists, the private investors, they think different. They think I want to invest some money and then I want to maximize the value of my money within the next 24 months, because within the next 24 months you need to raise the next round. You need to somehow increase maximize the value of my investment to have a potential fund returner for my fund that I have. And on the other side, if you are trying to leverage that kind of private money with also public money, then you have some issues because you are not like 50 people, you are 5 trying to get to 15. And out of 15 people, if there's like 1 FTE working just on public topics, it's just like too much. You don't have that kind of capacity. But yeah, just giving already maybe that kind of message there.
Thanks a lot. And I think maybe it will be interesting to know a bit more about Battolyser Systems' fundraise strategy, which has been quite successful, is seen as successful in Europe. How have you managed to put all of these pieces together, the support from the IB, the Series A, the Innovation Fund grant, and what did this milestone help you achieve in terms of growth and where you are at now?
So for us, we started with a Dutch entrepreneur that put in the first equity. So we kind of skipped over the friends and family sort of stage, which I think is helpful to be quick on your feet in the early days. Then we found venture capitalists to join us. Sort of that is a classical Series A. I think for us, what was a pivotal moment is the contract with the EIB, the venture debt. It was not only a proof of sign and a proof of confidence from the European Union in general for us early on in the company, but it also allowed subsequent investors to come on. Only recently, I think it was 2 days ago, the European Investment Bank announced also a new facility for backing basically product performance guarantees, which is also something that will be accessible for us because we are now part of the European Venture Debt Facility. Another spin-off for us there is the Scaling Club that we are part of, again basically triggered and by the European Investment Bank facility. So for us that was pivotal. And I think the next step for us is in an innovation fund, which is big for us. I'm still a little bit hesitant until everything is signed. And that adds together basically a journey that is investable, which to the point I made earlier for new investors. So we'll be looking towards a Series B next year. And we need to have this in order to attract again sort of a next round of equity.
Thanks a lot. Very, very impressive achievements there. Maybe Thiago, you want to share your experience, how it relates to Battolyser's experience, Battolyser Systems' experience in managing the funding needs?
Yeah, of course. I think like hopefully I'll see ourselves where you are in a couple of years. So we are a little bit earlier for sure. I think from our perspective, the same perspective as we're not spin-off of anywhere. We did not benefit from being able to develop our technology before we started the company. So it's good in a way because you're not necessarily tied with your IP, but also in our case it made us actually have to fundraise with investors. We didn't want to go to friends and family, so we had to convince investors based upon our entrepreneurial background and the things that we did in the past that we could do it again. And that was important. And I think I was thinking about it, essentially like the way I see it, you have to see where your advantages are, where there's sort of connections. I don't know how relevant it is for the people here today or how many startups are here, but the way I see it, like to close around, it's either, you are involved in the same ecosystem or, there's previous knowledge of the person that's running the particular investment firm, or somebody within that it's really, really, really knowledgeable about exactly what you're doing, very passionate about what you're doing. It's really hard to getting out of that particular sort of like 3 aspects to actually raise money, because in the end, people want to work with people they know. They want to be able to call them, say, well, how is this going? Are you part of my ecosystem, right? Or you want to be part of my ecosystem? So at least that was our experience on the private funding side. And I think on the public scheme, it's we went for the IPCEI early on. We were invited to do so, and I think it's still today we do not regret that. We hopefully this will be able to fulfill that. But within this, although we did not accede to the funds yet, it was super interesting to build our presence in the ecosystem and know the corporates. Also, like let's say the Horizon grant also almost came because we ended up working with one of the partners, and then we applied together. So that was fundamental. So I think it's like try and be opportunistic of where you go. And to some extent, but opportunistic where you have an advantage, right? If I decide to go, let's say, to a country that I have no ties or nobody in our team has a tie, just to be opportunistic, it's really, really hard. But if you have a connection, it's probably interesting to explore if where you are, you're not being able to succeed to some reason.
Thanks a lot. And jumping on the public funding, I would like to hear from Marc. So you've worked on IPSA, you've worked on Innovation Fund, you know all of these schemes very well. Do you have some feeling on which type of schemes are the most needed now? Which type of support they should provide? Which type of applications? Is it competitive bidding? Is it support for offtake? Is it support for production? What is your feeling? Or do we still need a quite comprehensive offer?
I think let's say the financial engineering, just talking about public funding, for big projects goes through the possibility to complement national funding and European funding. Mattijs recorded before. We know how to do that. Once again, the rule was on my slide. Basically, when you complement the two, you cannot go higher than an internal rate of return equal to your WACC. This is the rule in state aid. There are some other quite formal criteria, like if the state aid is funded through the recovery and residence facility, you cannot complement with European funding. Okay, this is all clear. Now, globally speaking, public funding for energy and climate transition is very dynamic. Many member states have initiatives when it comes to contract for difference for either green hydrogen or CO2 or whatever. So it's moving so fast. Companies have to be or rely on professional consultancies maybe, but also internally be able to have the resources to follow how this situation is moving. Also, a company like you, Battolyser, or many companies, when you want to scale up, you have the choice where you want to locate the scale up in theory. So I know that Germany and France have more money than the others, but you could also locate your projects anywhere in Europe for these reasons. No. So my point also is about the capacity that the member states have today to fund these projects. Germany and France are not in a good situation, at least France from the financial point of view. I want just to recall one option that was on the table from the precedent European Commission, that there was this European Sovereignty Fund that would be mutualized debt to allocate to the member states to rebalance the fact that state aid is proportionate to the size of the economies, and all smaller countries to put also more money than what they can do themselves into the energy and climate transition. So once again, it's a jungle, difficult to follow. Market watch is very important to identify the opportunities, and complementing also national funding and European funding, maybe also the Breakthrough Energy Catalyst, European Investment Bank, requires a lot of intelligence and engineering competence that are available on the market.
Thanks a lot. I don't know if Matthias, you wanted to add something?
I said no. It's not so easy to move to another country, particularly not because you need to convince your family to move, actually. But the more sticky thing is, as you are developing your first projects and you're bringing new technology to the market, you need to find a customer that believes in you, in your product. And that is a customer that we're not selling toothbrushes, right? We're selling something that has a potential to change a business model. And therefore that customer needs to be really close to you. We can't just pick up shop and move to the US and then create that same relationship and network in a short amount of time. So that's why I said it's not so easy.
Thanks a lot. I think we are running out of time, but I would like to hear maybe if some of you have some final points, messages which you didn't get the opportunity to share today on funding or finance or specific asks, maybe to the Commission or to partners or anything you want to be out there.
I would quickly say access to public money on the one side helping is very good. But when I first heard the story of Thiago, like 1.5 years ago, seeing like 1is1 Energy within the IPSAI projects together with like huge names and like the amount of money that was in, like 40+ million euros, I was like, you know what, private investors will like easily invest in that money. So this is like huge de-risk for private investors. But the thing is, to get to that money, this is somehow the process that needs to be like more efficient, because if you don't do that, you can't like attract more private investors in the first place. This would be like an important.
Yeah, I think they really need visibility, that's for sure. Any other points?
Yeah, maybe one for me. First of all, extremely grateful, as I mentioned before, of the support we receive, both from member states and European government. The one ask I would have, please introduce or think along the time value of, the value of time, sorry. And an innovation fund that awards to us in 2 years from now, with the potential of extending another 5 months to get all the paperwork before the money is on our bank account, those are light years for us. And if you talk about your WACC, right? So our cost of capital is not 7%, right? It's around 100 or plus, right? So that's extremely expensive. So we don't have that time. Scale-ups don't have that time. So please introduce the value of time into that assessment.
Any final points?
No, I fully agree with you. This is a message to the authorities.
I just want to thank Achmed for his comment.
Thanks a lot. Well, thanks everyone. I really encourage you to go and exchange with our speaker after and ask all the questions that you want, and then we'll leave the floor for the other question and the other session. A round of applause.